What real estate looks like in the world of Web3. Mortgage rates hit another high. Relief for FHA-backed borrowers, and Redfin kicks off their one-stop shop strategy with an acquisition. These are your top 4 real estate stories this week, brought to you by PropLogix. With all this recent talk about NFTs, cryptocurrencies, and Web3 and real estate, I decided earlier this week to call Nathan Wosnack, the founder and CEO of 𝗙𝗵𝗴𝗴𝗲𝗀, a real estate blockchain company. Nathan has been in the cryptocurrency game for 11 years and has been quoted by some big-name publications like Reuters, Housing Wire, and the Wall Street Journal. Here's the interview. Nathan, welcome to 4 Stories.
Thank you so much, Jordan. Pleasure to be here.
Nathan, kicking off, can you explain kind of all these emerging technologies? How would you summarize Web3, blockchain, NFTs, and cryptocurrencies, all those things kind of in layman's terms?
Layman's terms. I'll do my best to keep it in layman's terms. Well, we have different evolutions of the internet, right? Everything started off with the internet being desktops, programs, local area networks, and in some cases, wide area networks, so extended local area networks of organizations. As well as residential systems. Web 1.0, so like to think of Web 3 as really just one piece of the Web 3.0 component. And it's a lot of marketing buzz. So Web 3 proponents, in my opinion, they limit their definitions to the evolution of the data layer of it. So they only talk about, blockchain and DeFi, and those kind of things and NFTs, but it's only one subsect of it. Actually, if you looked at it, the Web 3.0 architecture, it extends to virtual reality, mixed reality, augmented reality, like you get with the Google glasses, which are interesting, as well as artificial intelligence. So, think of it like there's 3 different sections of it, but blockchain technology, Web 3. Is only one part of it. And then of course, you get into NFTs. So I'm sure your listeners have heard NFTs used in the use case of art, being everything from Sotheby's selling NFT technology or NFT art, which effectively is an image that has some data in the back end, a blockchain recording that can track ownership. And then there's other areas. I won't get into the IPFS side of things, but that's basically another way of storing that data and having an immutable record with a timestamp and all of that behind an image. And then, of course, you have all these creative artists who created NFTs, non-fungible tokens. And so really, they're basically cryptocurrency assets on a blockchain with the unique identification codes that distinguishes them from each other. Unlike cryptocurrencies, Jordan and listeners, they can't be traded at an exchange equivalency. So of course they can be exchanged on NFT markets and that kind of thing. But really, they would be only they'd be traded as NFTs, for cryptocurrency. They could be sold for a higher amount, and sometimes, I guess, in some cases, a lower amount, but it wouldn't be a one-for-one value. So it's a bit different. It's non-fungible tokens versus fungible tokens. Gotcha. In some cases, and my company, 𝗙𝗵𝗴𝗴𝗏𝗧𝗏, we've been really looking at pragmatic approaches to this technology. When we started the company 6.5 years ago, we were looking for real use cases with blockchain tech. Started with parallel recording. Did other things. We've been expanding out to tokenization as well of property, and some of the things that we're actually working on right now with one of our infrastructure partners out of Silicon Valley is called Real Items. And they actually have what's called phygitals. It's kind of a cute marketing term, but it effectively allows them to put either a QR code or a technology called NFC, or near field communications. And your listeners would probably know that by, your Visa or MasterCard that has the tap capability. And so being able to take those physical items and turn them into non-fungible tokens. And so some of the use cases we've thought of are like title policies on the blockchain and with digital items, maintenance records, industrial water heaters or air conditioning systems, things that have records but are not stored in a proper manner. I mean, I'll give you an example. I have an industrial air conditioning system by Honeywell, and the maintenance records are kept on a piece of cardboard in my home. and then the company has it stored on some centralized database. Well, those records could be falsified, lost, like hacked, modified by a third party. Whereas NFTs and blockchain technology would mitigate, the chances of that kind of fraud happening or loss of data.
Yeah, I think you summarized blockchain really well there too. And so NFTs is a big topic right now. All of these things really are making headlines across the real estate sector. Proppy just actually announced today that they have a second property that they are listing as an NFT that they are putting on the market. They were also like the first one, at least to my knowledge, in the United States to accomplish a sale like that.
That's right. Yeah, absolutely. And we're good friends with Natalia and Michael Arrington, founder of TechCrunch. He's obviously he put some of his property up in Kiev, Ukraine, as an NFT to showcase the power of blockchain technology in real estate. So, we commend them. I think that they've taken an approach that's interesting. Certainly with approach with home ownership with NFTs. We've taken a different approach, and so some other companies like BitPay's out there as well, where we're looking at not adding extra layers of complexity, and perhaps I'm wrong here, and maybe there's not a market demand just yet, and I could be completely wrong, and I'll regret this a year from now. There's a lot of money going into NFT technology, but for us, we think, well, there's a growing demand, and we're still collecting all the statistics on this, all the data, to find out what the real demand is for cryptocurrency plus real estate transactions. But we're getting inquiries every day. We have title companies, underwriters as well. Washington State Ranger Title will be working on a cryptocurrency property to be sold, a hybrid of fiat currency, so U.S. dollars, as well as Bitcoin. So that's going to be pretty, unique. And we're working on a bunch of different deals with agents and brokers too. So it's for us, I don't know. I just wanted to take a different approach, not adding NFTs to it, but really, what's the demand? Well, people have cryptocurrencies. People maybe want to do it with a stable coin being a cryptocurrency that is pegged against a fiat currency generally. So that would be a good way to keep stability, and because that's the biggest fear that people have is volatility within the market. You sell your home and the Bitcoin. Imagine selling your home and then the Bitcoin price just
and that's
goes up.
Right. That's what happened too. I remember I think it was like 2 days later after this one property was sold, the price of Ethereum, at least the Ethereum that they had, went down like $60,000. So you're like taking something that's already a volatile investment and introducing even more risk into the transaction.
Absolutely. Yeah. And we mitigate that. I mean, we mitigate that through our payment processors. So we use, we're white labeling a couple payment processors, and they've allowed us to be able to take regular cryptocurrency and then lock it in. But we generally try to push our customers to use stable coins. That way it guarantees the price for everybody across the board, right? So it's fair even for our partners. So
a lot of, I would say most of the audience, most of the people listening, they're probably title agents. That's PropLogix's bread and butter. The technology is obviously going to change how real estate transacts. How is it going to impact title specifically, would you think? You talked about a little bit about how through the blockchain and NFTs, how that would work. But what do you see as the future of real estate with all these different technologies kind of coming in?
Great question. I would say, personally speaking, and probably the views of at least some of our team members and shareholders, is being able to speed up future title search and be able to reduce, errors that happened. A lot of errors can happen through data entry, and mind you, errors can still happen with blockchain technology, but it could be kind of caught quicker. Being able to, I think, not reduce jobs within county recording offices, but probably, up the skill sets of people who are working there with this technology. But I think the biggest one that comes to mind is being able to speed up future title search, being able to get around having to use some of these data brokers that companies use, like DataTrace and others, where do you really own that data? And then it could be, I'm not saying anything bad against DataTrace and First American, but there are companies out there that they can kind of control that market, and then they they control the flow of information, and being able to build out something with blockchain technology and NFTs, and being able to go back to historical records, not just for new titles, but going back historical data, say 10, 15, 20 years, particularly when it comes to using more affordable blockchains that, Ethereum would be just so cost prohibitive. Bitcoin would be cost prohibitive for every transaction. But there are other blockchains out there like Proton Chain. There are infrastructure partners, Polygon, that has really brought down costs as well. That could help not just for new titles or clean records of ownership, but being able to go historical. And I think that will help reduce fraud. It could help speed up title search and make things, I'm always looking like small efficiencies that are added over time will really make a big difference in the long term.
Yeah. How can someone, there's so much information about these, even trying to summarize some of these different types of technologies is really difficult. How can someone, what's the best place for someone to go learn more, stay informed, or even start participating in some of these revolutionary processes and technologies?
Absolutely. Well, we have, I would say CoinDesk is a good place to start for a lot of the news. If someone is somewhat technically inclined, I would recommend they go to bitcoin.org and read Satoshi Nakamoto's white paper. That might be a lot to take in for the layperson, but that's a good place to start is CoinDesk. Obviously, Ubiquity, we have free webinars, we have premier webinars as well that we're putting out content as well. Government Blockchain Association, gbaglobal.org, has a lot of free information and information for members as well. And just going on Twitter, but being very careful. There's a lot of scammers out there, and don't fall for any of it. Make sure you know what you're doing. If the people are going to look at getting their first cryptocurrency, as much as my friends, especially my Bitcoin maximalist friends, will be hating to hear this, starting on an exchange that has insurance is probably a good idea. Like there's Coinbase. There are other exchanges out there that they could get started on, but they have to realize that if you don't own if you don't have your private keys, you don't truly own that crypto. So try to trade it and then get off of it and store your own cryptocurrencies. You could can't speak. You can do this. You could probably edit that part. You can do so with using wallet applications like Proton Wallet. That's a good one. You can actually exchange multiple cryptocurrencies for free, so there's no costs involved. That technology is called atomic swaps for anyone who's interested. And being able to do gas fee-less transactions, and then you hold your own keys. You have your own wallet. That's another place to start as well. So you can get a wallet from Proton Chain.
Nathan, it's been really good chatting, and I think that you have really helped clarify a lot of what's happening. And obviously, I think it's safe to say if anyone has any further questions, they can reach out to Nathan Wosnack on LinkedIn. He's pretty active.
I'm very active. And actually, I'll add one thing. I'll give a little bit of a shout out here to 𝗷𝗶𝗴𝗏𝗀𝗏. She's a broker and a realtor, and this lady has all of the crypto news every single day. She's a partner as well to Ubiquity, an advisor. If anyone wants to follow her, follow 𝗷𝗶𝗴𝗏𝗏, follow me on LinkedIn. You can reach out Nathan@ubiquity.io, or you can go to our website, ubiquity.io, and we'll be more than happy to help you.
Thanks a lot, Nate.
Thank you. Have a great day.
1 year ago today, you could bank a 30-year fixed mortgage at a rate of 3.38%. Today, that number is roughly 5%, marking the first time in 11 years it's ever crossed that threshold outside of 2 days in 2018. This is partially due to recent policies introduced by the Federal Reserve to help curb inflation, as well as global economic turmoil from the Russian invasion of Ukraine. For borrowers with government-backed loans, the FHA is seeking to introduce a 40-year loan modification option as it requests input from the mortgage industry. It's a plan that would prevent several thousand borrowers a year from foreclosure. As of December of last year, roughly 7% of FHA loans were considered seriously delinquent, which is considered high compared to pre-pandemic rates. The clear downsides to this option are slower earned equity and additional interest rates over 120 months, which don't necessarily outweigh the ability to retain a home. Redfin announced last Friday that they've completed their acquisition of Bay Equity Home Loans for almost $138 million in cash. The acquisition provides immediate benefits to customers, agents, and officers of Bay Equity, allowing Redfin to become a one-stop shop for consumers to buy, sell, rent, and finance a home. That's it for 4 stories. The news doesn't end here. Follow PropLogix on social media. Subscribe to the show on any of your favorite podcast platforms. Watch behind-the-scenes footage on YouTube. And comment down below to let us know what you think. I'll see you next week.